You know, this whole issue of the GDP is a big topic for the Fed. It was a major discussion at their last meeting in April, according to the minutes. Can you trust the numbers? Since that April meeting when they brought up the issue, it's been one lousy first quarter after another. It's wintertime and the economy just sinks. Why is that? They're not really sure. But the Philly Fed and the San Francisco Fed have put out studies since then that suggest the economy is much stronger than the first quarter numbers have been telling us, maybe as much as 2%. So I asked Jim Bullard about it yesterday, and here's what he said. He's concerned as well.
Last year, the first quarter was negative, and it looks like the first quarter will get revised down into negative territory this year as well. I think there's, pretty substantial residual seasonality. If you take the quarterly GDP numbers and you run them through a seasonal filter, you're going to get seasonal factors that shouldn't be there because this is supposed to be deseasonalized data. So I think, we've got to view the first quarter numbers as a little bit suspect. Last year we looked through the number and we did get very strong growth in the second and third quarters, so we'll see if something similar happens.
It's frustrating, he says, because they want to raise rates, but they can't trust the data. Until they're sure that the economy is strong, they're going to be sidelined. So they need better data than they're getting right now.
So Jim Bullard has felt for some time, right, that there are big issues with the looseness, shall we say, of Fed monetary policy. Certainly when we were in quantitative easing, he's got to be happy that quantitative easing is over. Maybe he doesn't love the size of the Fed's balance sheet. How does he feel about interest rates?
He thinks interest rates need to go up. By the end of next year, he told me he expects unemployment to be 4% and growth around 3%. With those numbers, he said...
And why, in his opinion, hasn't it happened? He thinks the Fed's just delusional?
Oh, at this point, they're waiting for consensus on it. They need the right data. But he says if we don't move soon, we're going to have another asset bubble.
I think our base case is that we'd like to normalize, or at least I'd like to normalize. And that's what I'll be arguing for and supporting, as long as we don't have some indication that the economy is slowing down in some unanticipated way. I'd be supportive of getting started with the normalization process because we have a long, long way to go.
Yeah, he won't say how far a long way is. I asked him what's neutral rate, and he wouldn't say. But a lot of people are talking 3 to 4%. Right? Yeah,
what the neutral rate?
But it's going to be years till we get there. He says.
But does he share the view, popularized, let's say, by the likes of Bill Gross, that the neutral rate in this cycle is going to be lower than it was in previous cycles?
And on an interim basis, yes, but longer term, no. He thinks the economy is going to be coming back, and eventually we're going to have to get to maybe 3% or so.
So historical norms.
Historical norms, yeah. He's going to be,
we'll revert to
for that neutral
norms.
rate, he's going to be closer to the top of the dot chart.
What other concerns does Jim Bullard raise?
Well, the interesting thing that he did yesterday was put out a paper suggesting QE doesn't necessarily work. And the forward guidance that they put out as a policy didn't necessarily work.
What is his ultimate goal here? I mean, these are some pretty aggressive criticisms.
Well, Jim is sort of an intellectual guy, and he puts out these papers that influence the debate one way or other. He was one of the first people to talk about deflation, that famous speech called The Seven Faces of the Peril. In this case, it's monetary policy at the zero bound, not exactly a catchy title, but he's saying we thought we would get faster growth from QE than we did, and maybe it works in theory, but not so much in practice.
We didn't get faster growth. We got richer rich people.
Yes.
Don't you love how literate these Fed regional presidents are?